Welcome to Business Avenue, a portal for relevant tidbits for your career and business. My name is Edmond Gamna, and it's my singular honor coming your way with another episode. Okay. Now, do you have an expenditure pattern? What informs your decision to spend in one area over the other? How much do you spend in one activity over the other? What necessitates that? In this episode, we are going to talk about budgeting. Okay. Budget is a spending plan for a business. It helps a business to be able to allocate the funds that it has on the activity or expenditure areas of the business to be able to achieve its objective and get profit. So it has to estimate every element that relates to the business. So the sales, the various costs related to the sales, and the profit is estimated. It sets the tone for the way the business is supposed to execute its activities. Okay, everything must meet the budget. If you go outside it, then there will be cause for concern. Budget for small businesses is normally what we call the operations budget. So it encompasses all the activity areas or the elements of the business in that budget. For medium to large scale enterprises, normally they have budget for different segments of the business. So you have a budget for sales, a budget for production, comprising of the materials, labor, overheads. You have a budget for maybe marketing and distribution. Okay. Budget is different from forecasting. Forecasting is just the prediction of a future activity, whilst budgeting is a planned execution to achieve a future outcome. Now, let's look at the benefits of budgeting. So a budget enables a business to plan. It affords you the opportunity to be able to allocate the resources you have onto the listed activity areas or expenditure lines that you have. It also helps a business to monitor performance. The budget becomes a blueprint to which all the other activities must conform. If there is a deviation, it will be quickly noticeable and any remedy done. Thirdly, budget helps in controlling. Once the budget is available, the actual performance of the business as compared to it. If there are gaps, investigations are launched and the differences were rectified. Budget also serves as authorization and or delegation. Once the budget has been drawn for an expenditure or an activity to be undertaken, the personnel involved courageously or confidently are able to expend it within the remit of the budget. Budget also serves as a form of communication. It tells the various units what the business is ready to expend on. It also tells outsiders the plan for the period or the vision of the business for that particular period. Let's talk about how you prepare a budget. For you to prepare a budget, you must first identify the principal budget factor. So the principal budget factor is the factor that influences the budgeting process as well as the other areas in the institution or the business. Let's assume your business has the capacity to produce 2,000 units of products to sell, but the market can only absorb or patronize half of it, which is 1,000. This half is going to influence the amount of material to buy, the number of labor hours to engage just to meet the 1,000. Now, the principal budget factor can be material. So in as much as whatever you can produce can be patronized on the market, you might have difficulties in attracting the right materials or the quantity of materials to be able to produce it. So if it takes 2 units to produce the product, you have the capacity to produce 2,000, the market can absorb the 2,000. It means you need 4,000 units of the materials. If you can only get 2,000, it means the material is now influencing the output or the product amount you should produce to be able to sell. So with labor and overhead, when the skilled labor you require is in short supply, it will affect the other areas. Once you've been able to identify the principal budget factor, you have to prepare its budget first. How do you prepare it? You look at the quantity involved. If it is 1,000, then you look at the best rate it is going for. If it is sales, the selling price that the business has estimated. If it is the material, you should scan the market and get the best price possible to be able to attract them in. Okay. So once that is done, you put them in a document, the sales, you less the various expenditures, then you get your profits. Okay. Let's now look at the types of budget available. The first budget one can prepare is the fixed budget. But the fixed budget, once it has been drawn at the beginning of the period, it is left static till the end of the budget period, which might be a month, a quarter, or a year. When the time has elapsed, the actual performance is drawn and compared to the fixed budget. This is important because it saves time. Once it is drawn, all attention is focused on the execution of the business's activity to achieve its objective. It has a demerit because it doesn't allow for reasonable comparison between the actual expenditure and the budget, because the basis for both the actual and the budgeted expenditures are unleveled, because you can have a budget which is prepared based on 10,000 units of production. The actual production will be done based on 20,000 units. The gap that exists, it will not make room for meaningful analysis or control. The second budget a business can prepare is what we call the flex budget. Now, unlike the fixed budget, once the budget is prepared at the beginning of the period, okay, down the line, when the basis of preparation changes, the budget has to be adjusted. The original budget has to be adjusted to reflect the change in activity level. For example, you have identified the sales to be a principal budget factor, which is, let's say, 10,000, and you have prepared the budget based on that. Then, let's say 2 months afterwards, you realize that the business can sell 15,000. So the activity level has changed. The original budget based on the 10,000 will have to be adjusted to reflect estimate on the 15,000, not the rate. Now what you do is that once the sales moves up, the other element of production, the material, labor, and overhead, you have to find a percentage of it. So if the material is 30% of the sales, to be able to get the flex material, we find 30% of the flex sales to get that. So with the labor and overheads. Now this is very good a practice because it allows for meaningful comparison, because the bases are the same. The activity levels for both the budget and the actual performances are the same. It has a demerit because it wastes time, because once the budget, time has been spent in preparing the budget. Anytime there is a change, a team must be put together again to prepare another budget. The last budget type we will discuss is the rolling budget. With the rolling budget, the period of budgeting doesn't change. So if you're budgeting for 1 year, when you spend 2 months, another 2 months budget has to be prepared and added to the rest of the budget period. So at any point in time, the budget period stays static. It doesn't change. Okay. Let's look at the outcomes of a budget. Once the budget has been produced, okay, there are 3 outcomes possible. The first is a balanced budget. So here, the elements or the metrics in the budget meets the actual expenditure. So if you budgeted to sell 1,000 units of your product, you actually sold 1,000 units. If the 1,000 units were supposed to go for $2 per unit, they went for $2. So there are no discrepancies. Okay. When you come to the next one, which is a surplus. So the surplus is when the actual performance is more favorable than the budget. Okay, so for example, if you plan or budgeted for 1,000 units to be sold, you sold 1,005 or 2,000. If you plan to buy materials for $1 per unit, you were able to buy it for 50 cents per unit, which is favorable. The third type of budget is a deficit. Here, the budget is more favorable than the actual performance. So if you budgeted for 10,000 units to be sold, you sold maybe 9,000. If it was supposed to be sold at $2, you sold the actual quantity, but it went for $8, which is an adverse gap. So these are the 3 outcomes. If your budget is not balanced, it will be in surplus or in deficit. Okay. Let's talk about the methods to budgeting. Methods to budgeting. So you can prepare a budget using the incremental. You pick the previous year's budget, then you apply it to the current or the ensuing years, okay, and adjust it for price inflation or other elements that come into being. Okay. This budget line has a positive feature because it saves time. What you prepared in the previous year, you just move it onto the current year and adjust for certain elements which is present in the current circumstances to make it realistic. It has a deficit because it doesn't allow for innovation or initiative. Okay, even if the line manager can work to reduce the budget, he doesn't have the incentive to do so because it will affect his department in the following year. The second method of budgeting is activity-based. So here the objective is set, and every activity that relates to the achievement of the objective is what gets onto the budget. The third one is value-based approach. Everything that gets into the budget is based on the value it is going to provide, not the activity per se or what transpired in the previous year. The last method of budgeting is the zero-based budgeting. With the zero-based budgeting, every period of budgeting starts from the scratch. No matter what happened in the previous year, managers of unit or department must now come and justify why the item that they are outlining should be included in the budget. Let's now look at the approaches to budgeting. So the first one we call the imposed budget. So here, executive or senior level management sets the budget, imposes it on middle or lower level management to achieve with its employees. So there's no input coming in from lower to middle level managers. Okay. The second approach to budgeting is what we call the negotiated. So here, the estimates come from managers, senior level managers, but they invite input from middle to lower level managers. Okay. So both of them put their heads together and bring the final output. The last approach to budgeting is the participatory. So here, the initiative begins from the lower level managers or employees. They estimate what they think should be given to them for them to achieve their objective or their activity. Then it goes up to managers for them to scrutinize and accept what goes into the budget. Finally, we are going to talk about how to achieve a meaningful budget. For that, you must allocate enough time in the preparation of the budget. The budget process shouldn't be rushed. Now, when you have enough time allocated to the budgeting process, you will be able to consider all aspects of the business, draw them in, consider every expenditure that is related to it, the best price you can get with respect to materials or labor, the best selling price you can achieve on the market, so that when the budget comes out, it will be comprehensive. Secondly, you must make realistic budget. Okay, in as much as you hope to sell more, your sales should be the reality on the market. Realistic budget sets the tone for a successful implementation of the budget. The last one is to get the right people aboard in the setting of the budget. Once those who are in charge of execution are part in the setting of the budget, it helps in the relevant factors to be put in the budget. So because they are the people on the ground, they are going to tell you what it will take and what is required to be put in the budget for a successful implementation. Also, it motivates those who are going to implement the budget because they feel it is their view they are working with. They own the budget, and it's easier for them to work and achieve the purpose at hand. Okay. So guys, you must apply budget to your business for you to achieve success. If there is any feedback that you have for us, do not hesitate to put them in the comment section below, or you can contact us in the details below the screen. Catch us again on another episode of Business Avenue. Till then, take care of yourself and stay blessed.